Mikal Howard Finance. I hope you're all well. I just wanted to do this quick video for you and just do it as a bit of a yearly update in the year that was. It's been a pretty crazy 2019. And just basically I'd like to thank everyone, all of my clients, some of you that are reading this. We've done business together this year because as you may have known from my recent emails, that I just turned one, or Mikal Howard Finance just turned one, which was really exciting, and it's been a really good year in that sense, even through everything that's gone on in the industry. So for those that I have done business with and helped, thank you very much. Thank you very much. I really appreciate doing the business and building those relationships with you, and being that person that you think of first to call and ask for help in a finance and loan sense. For those of you that haven't yet done business with me, I'd love to. And in that instance, what I'd like you to sort of think about for 2020 is, given all the changes, probably make 2020 the year of review. It's worthwhile doing. There's been a lot of changes in the assessment rate space, where lenders have what's called an assessment rate that they will assess you against. So you might come in and we might be able to look at getting you a nice shiny 3% rate, or even some cases less than that at the moment. There's some lenders that are offering in sort of the 2.9s thereabouts. The assessment rates are actually a little bit higher than that, and they have been traditionally a lot higher, but they changed sort of after sort of mid-year around August, September, and things got a little bit better, a little bit easier for you guys to change. So now's a really good time to sort of give me a call, and we can do a review and see what we can do, because the last thing you should be doing is sitting just on thinking that your rate and your home loan is working for you and paying the bank more than you have to. That's just silly. So give me a call, let's have a look at it, and we'll get things reviewed, and hopefully we can change things over. That's probably my best advice in that space. It's definitely worthwhile doing, and seeing how much you could possibly save. The Royal Commission earlier in the year was released in February, and that was terrible for mortgage brokers in our industry. The big banks really, they literally threw us under the bus. No, not literally. That's silly. but yeah, they definitely hung mortgage brokers out to dry. And I firmly believe that we're the good in this space. We offer you a lot of choice and competition, essentially. So thank you again for using me. It's you'll get better service. I can put my hand on my heart and say that you'll definitely get better service coming to see me, and I'll make sure that you're forefront of what I do in this business. So yeah, that's what they said in the Royal Commission was just blatantly wrong. There's been some good things that have come out of it, though, admittedly. So with everything, there's always change, and a lot of the change that I'm seeing, whilst it's making things a little bit more difficult, I actually do see some really good things out of it. The things that you don't necessarily, as my clients, will see, the good things happening in the background. There's a lot more focus on the compliance and making sure that we're not putting you into incorrect products and those sorts of things, that we truly do have you and your hopes and your dreams at the forefront of our minds, and the way we help structure your deals, even if it's just a single mortgage, making sure that it's right for you, that you're paying the least amount of interest, and able to achieve the things that you want to achieve, whether it's doing a renovation, going on a holiday, buying a new car, buying a boat or whatever, a holiday home, those sorts of things. I can do all of that. So, but we do it where we make sure that it's structured correctly and that you have control, not the lender has control. That's a big thing for me. And not only that, is actually just sitting and talking to you and making sure that you understand what's happening. Because the number of times I sit down with people and chat with them, and the products that they do have, they don't know anything about, or they've not understood how they've been structured and why they've been structured a certain way. I'm big on the education, so please use me for that as well, because you need to understand what you're doing. You're borrowing a lot of money for the things that you want to buy. You want to make sure that it's going to work for you. There's been a lot of rate decreases this year. We've had 3. The RBA decreasing the Reserve Bank lowering rates 3 times, and we've seen some of those in each instance passed on by all of the lenders. So you should have seen that occur, which is good. Sad that it's not the full amount every time with those lenders, but yeah, good regardless to see those decreases just happening. Because of that, I've seen an increase in competition, and probably I suppose since the early part of this year, it's actually brought about a lot of competition, and the lenders are offering really sharp rates, and some are even prepared to discount in that sense. When I'm talking to lenders, I'm saying, look, this person's bringing this size loan and maybe this amount of asset to the lender. What can you do? Can we do a little bit better than the what's called the carded rate? Can see if we can get an additional discount as well. So, which is another benefit for coming to see me, is that I've got that opportunity to talk directly with the lender and see if we can pit some lenders against each other depending on your situation. So yeah, I just sort of like to reiterate again, just make 2020 a year of review. Really look at what you've got, and not just in a mortgage sense as well. Have a look at your insurances. It's something that actually I personally want to sit down and do this year. It's been probably 2 or 3 years since I've reviewed all of my own personal insurances. So your home and contents, your car insurance, all those sorts of things. You've got to keep these guys in check, basically. Make sure that you're paying, having the appropriate product, but making sure that you're not paying, through the nose for it. The premiums go up every year if you don't tell them to not put it up, with CPI and those sorts of things. So be aware that it's, just life, and leaving things the way they are is costing you money. So, be proactive and make it a year of review and see if you can put some money back into your pocket. And if need be, there are services that can help you with that. If you just don't have the time, I know of people that can help with that sort of thing. So, in a mortgage sense, again, see me, I can do that, absolutely. And some of the insurances, I might be able to have a look at, but I've definitely got people that I can help guide you to help you through that. But it's absolutely worthwhile doing. Budgets, it's for a lot of people it's actually a pretty scary word, but this year I've really seen the focus by lenders ramp up. So budgeting, there's having a budget, and there's budgeting. It needs to become a priority. If you want to be borrower ready, you absolutely need to have a budget and know where your money's going and what you're spending your money on. The number of times it's one of the things we have to do, is sit down and ask and have a chat about where you're spending your money. It's no longer, lenders don't just accept you saying, this is what I spend, and this is how much I'm saving, etc. They scrutinise everything. They look at everything, all your expenses, your transactions, and they, if it's considered regular and ongoing, then it's assumed that you spend that, and they take that into account, and that goes can sometimes go against you in terms of whether a lender will approve or decline your loan. So I do have fairly in-depth conversations with all of you guys, and a lot of my clients that have done it this year will have noticed that. I'm doing it out of the best interest for you. We need to make sure, well, I need to make sure that I understand how you spend your money. I'm never going to sit here and tell you that you need to not spend your money. It's your life, it's your money. But what I do need to get across to you is that you need to be borrower ready. So just keeping control of your spending, making sure that everything's up to date. All your loan facilities are all in advance if possible, but at least being repaid on time. There's going to be more coming next year as well. I sort of jump ahead a little bit, but there's something called comprehensive credit reporting, or positive credit reporting, basically where lenders are now coming on board, where they're actually going to list on your credit files 24 months worth of essentially repayment history. So if at any time in the past 24 months, if you've been late with payments, and there's different periods of time, I suppose. I think it's even up to a fortnight, to a month, to 2 months, 3 months, 6 months. That they're all graded, and you get numbers basically assigned to each time bracket of how late you are with your repayments, and they get added to your credit file. So every month it's actually updated. So the 25th month will drop off, and a new month gets added, essentially. So your repayment history is going to be very easy for lenders to see. And that's going to make a big difference in how you're assessed when you're borrowing money. So that, along with, and there's only a few lenders that have joined on to that, but it's some of the smaller ones, your Latitude Finance, your Go Finance, those things that you might get from Harvey Norman, those things are already on there. There's already some lenders joining as well. So one thing I can probably suggest is actually if you order your free credit file and have a look at that and just sort of familiarise yourself with where you currently sit as well. You can go to www.equifax.com.au. That's EQUIFAX, and just follow the links through to your free credit file and order that and have a look. And that actually is a good thing to come to me with as well, so that you sort of know your position and I can have a look. And even if you want to order that and give me a call and ask the question, I'm happy to have a chat to you about that as well. So yeah, budgets, it's understanding where your dollars are going basically, sort of your income's in and what are your expenses out. Understanding that, knowing what's happening, talk to me so that when an assessor calls me and says, Jenny's declared this much, but we're sort of seeing something else. Have they missed something? It's a conversation that I can have it directly with the assessor, that doesn't need to have me come back to you backwards and forwards because we keep missing things. The more I understand and know now, the better it's going to be in the long run, because I want to keep I don't want to keep having to call you guys, and it becomes a bit of an annoying process for everyone then. So, let's have that conversation up front. Get yourself budget ready, borrower ready, and everything will be great. And it is a big focus of the lender, so it's not something that I'm going to stop doing. It's something that I will absolutely be continuing with, because it is very important. But it's just an awareness thing, basically. So don't be scared of it. Set one up, and it's always nice to know where your money's going anyway, because I see it as well. I spend a bit of money on, I enjoy my coffee. For anyone that knows me, I do love my coffee. It's pretty crazy sometimes when people see how much they've actually spent on those little things. We tap everything these days, so it's all those little purchases that add up. Between $3 and $10. For those different items, that adds up a lot in your monthly budget. And if you're spending it off, regular and ongoing, it's not something that we can necessarily take out as discretionary spend anymore, even though we could easily stop it. That's just not the way the lenders are working. So just be aware of that. So sometimes it's a case of maybe having a 3-month or a 6-month period if you want to borrow, clearing things up and not tapping as much, then it's definitely worthwhile doing. Other than that, thank you very much. It's been a great year. I'd love to see and meet more of you, the guys that are that are out there that I haven't done business with yet. Give me a call. Let's make it a year of review. Let's have a look, see if we can save you some money. Merry Christmas. Have a safe and a happy Christmas, and also a very safe and prosperous new year. And I'm looking forward to seeing as many of you as possible in 2020. So all the very, very best. Have a great one. Thank you.